Pop quiz. What's the first step you need to take on this debt-free journey? Simple. You got to come up with a game plan, an action plan, a strategy that you're going to use to help you get out of debt. Hello, my name is Ed Smith. I'm the founder of the Debt Freedom Syndicate. And in this training today, we are going to walk through a simple process, a simple strategy to help you get out of debt in record time. Here's the deal. There are tons and tons of options, okay, out there. That's both a blessing and a curse, because realistically, the way human nature works and the way our minds work, the more options we have, the more we tend to overanalyze and overthink, and we get caught up in the process and never really get to the action part. Okay, we get caught up thinking. So we're going to cut all that out and eliminate it and just kind of focus, channel our focus on one strategy. And that strategy we're going to use is called the Debt Snowball, which is basically racking, stacking your debts from lowest balance to highest balance, and then basically paying the minimum of each one and roll it down until, you know, the ball gets bigger as it goes further down the hill, and you're paying off your debt faster and faster. Okay, simple process. I like it for its ease and its simplicity, and that makes this process work because it's doable by anybody, and that's the key. Okay, so we're going to use a calculator, an online calculator from a company called Vertex 42. It's just a free calculator you can find online. You can Google it, or if you're here on the page, if you're here on the YouTube channel, go over here in the upper right-hand corner where it says Debt Freedom Info. Click on that. It's going to take you to a page. This is our information page on this whole Debt Freedom Syndicate process, okay? So when you get here, watch this video. Shameless plug, watch this video. It's very informative. It explains the whole process, the entire process, okay? So as you can see here on this page, there are 4 steps to utilize. We're going to focus on step number 1 right now, which is grab the calculator. So all you have to do is click on this button. It's going to take you to the page for Vertex 42. Now, on this page, they have a ton of information and a ton of ads that get kind of annoying, actually. But hey, don't worry about it. It is what it is. But there's a ton of information on this page you can read about, you know, getting out of debt and the debt snowball in particular. But if you're just curious about the other options that are available, you can scroll all the way to the bottom, and then down here, it kind of breaks down some of the different options: the snowball, avalanche, you know, user specified, snowflaking, all that stuff. So if you want to read this stuff, you really can. But realistically, all you need from this page is to go back up to the top, up here, right here where it says debt reduction calculator. Okay, you have 2 options: either Excel or Google, whichever you prefer. I prefer Google Sheets only because I know I can get to it from anywhere. I can get access to Google. And if you have a Gmail account, you have access to Google Documents and Google Sheets, and that's all you need. Okay, so but this is what the calculator looks like. So all you're gonna do here from this page, this is a free option. It gives you up to 10 creditors, which is really all you need, because you can adjust it later on if you need to. But if you just happen to be where you want all of your debts listed on the page so you can see it, there's a paid option down here. I am not an affiliate. I don't get anything from this. I'm just showing it to you. You can get a paid option for $9.95, which gives you up to 40 creditors. But realistically, the one with 10 works just fine for our purposes. Okay, so choose whichever option you prefer, Excel or Google Sheets. I like Google Sheets. So I'm going to click on that button. And what it's going to do is pop up an ad, of course. So just hit close. It's going to take you to this page here where it says get the template. Click on that button. And it's going to bring up the template in your Google account. Okay. So in one of your Gmail accounts, it's going to bring up this template. You click on the button, use template. When it does that, it's going to actually load it into your Google account, your Google Sheets account associated with whatever Gmail account you have. Okay. So now you have it. And this is all you need. So you don't even need that page anymore. That website, you can click out of it. Nope. I don't want any of this right now. All I want is a calculator, which is here. Okay. So the calculator is very simple. It's very straightforward. All you're going to do is list out your debts, put in the date, and then put in the amount that you pay already each month. Okay. So let's just, to show you that this is live, let's put in today's date, which is 7/14/2023. All right. That's our starting point. And then you list all your creditors. Now, again, you have up to 10. They give you some sample data right here. So we'll just keep the sample data because it all works the same. And really all you can do is list the creditor, the balance that you currently owe as of this date, your interest rate, and how much your minimum monthly payment is on each individual debt. Now, as far as creditors go, you can keep it generic like this, where they have card 1, card 2, card 3. You know what? Let me make it a little bit bigger just so you can see it. Okay. So here under the creditor column, they have a generic card 1, auto loan 1, student loan 1. You can keep it generic like that, or you can put in it what your actual creditors are. Chase, Capital One, Bank of America, whatever. You can list your payments here, and then your balances, the rate, and the payment. We're going to skip this custom column for right now because we don't need it for our purposes. So we're just going to ignore that whole column. That's for if you want to do custom, a user-defined format, but we're going to use the Debt Snowball, again, for simplicity's sake, okay? So using the examples that they have in here right now, they have 5 creditors. Total of all the balances is $26,500. Total of each minimum monthly payment is $270. Now, if you notice little windows pop up, if you hover over some of these sales, they have notes in there so you can read about what that sale represents in detail. But we're going to skip that part for right now. Okay. Now, once you have your creditors in here and the amounts down here in this block where it says minimum monthly payment, again, it comes up and explains in detail, but we don't need it. But basically, what this cell represents is if you pay a little bit more than your minimum each month, you would put the amount that you actually pay each month towards your debt in here. Okay. And so let's say, for example, in this case, we have $270 in minimum monthly payments. If we only paid the minimum, we'll put in 270. Okay. And that's that. What this determines is what they call your initial debt snowball. And again, it pops up and explains what it is. But basically, the debt snowball is the amount that you are able to pay above and beyond your minimum monthly payments. Okay. So what it basically boils down to is if you only pay the minimum, you would have no snowball. If you pay, let's say we pay $300 a month towards our debt in this scenario. Okay. So now our snowball is $30. It's the amount that we actually pay minus what the minimums are. That gives you what the snowball will be. Okay. So you can play with these numbers to suit your particular individual case. Now, I failed to mention I am not a financial advisor. I am not giving financial advice. I'm simply showing you a spreadsheet that's available that you can play with as a user and, use it for your education and for your guidance purposes only. But I'm not giving you any financial advice, legal advice. You need to talk to a certified public accountant or a CPA, your bookkeeper or whatever it is you have. Talk to that person, that professional. I'm not it. I'm just giving you an example of what you can do. Okay. Put that out there. Okay. Now, so once you have the debts in here and then the amount you actually pay each month, under strategies where we're going to go next. You hit the little down arrow and you have different options in here. We are going to use the snowball, lowest balance first. Okay. And all that basically says is for our purposes of debt payoff, we're going to start with the one with the lowest balance and work our way down to the biggest balance. So what happens is when you do that down here, these are the results and it changes the order of the debt. So it doesn't matter what order you put it in up here. When you select the option snowball, it's going to readjust from lowest balance to highest balance. You can see it here, 3,200 is lowest balance, 9,000 is the highest. So it racked and stacked based on the balance. Okay. So what this spreadsheet down here shows you is the total interest you're going to end up paying, the number of years it's going to take you to pay it off, and the month that'll be paid off. Okay. So in our scenario right now, if we had minimum monthly payments of $270 on $26,500 worth of debt, and we paid actually $300, which made our snowball $30, it would take us until December 2038 to get out of debt, which is 100% unacceptable. We are not going to be paying debt that long. It's 2023, and this is saying it's going to take us till 2038, 15 years to get out of debt. We are not doing that. No, because we are smarter than that. Okay. So that's what this whole thing is about. Now, here's the cool part. Down here, you have a couple of tabs to calculate itself. You want to go to the next tab, payment schedule. And what the payment schedule does is take that bottom sheet that we had on the first page and just kind of reformats it in a tabular form. So it's easier to follow and easier to track. So you have the same debts in the order from lowest to largest. You have the creditor up here. The balance 32 to 9,000 is our biggest. The rates, what your base payment is, which is basically what your current minimum amount is listed for each debt. How long does it take it in months to pay off? The date you're going to pay off, and total interest. Okay, so it's the same information, just reformatted different so you can see it. Now, here's how it breaks down on a monthly basis. Down here is just taking, again, the same data, rolling it down, and now we're applying our monthly payment to each bill. So the way the debt snowball works is whatever amount we determine as our snowball amount, we add that to the minimum amount of the first debt. So in this case, the first debt's minimum amount is 30 bucks. Our snowball is 30 bucks. And you can see that reflected over here in this column under snowball for each month. So each month we're going to have 30 bucks extra that we're putting towards the debt. So the 30 bucks for the snowball plus the 30 bucks minimum equals 60 bucks going towards the first debt on a monthly basis. Okay. And we do that until such time that that debt gets paid off. Once that debt gets paid off, and in this case, in our example, it's June of 2029. Okay. You see the 30 bucks plus the 30 that was already there, the 60 bucks we paid until we're finally done. In July of 2029, what we do is we now take this 60 bucks that we were paying on debt number one. Now that debt number one is paid off, we're going to roll it over to debt number two. So we're taking the 50 bucks that was already being applied to debt number two, add the 60 to it, and now we're paying 110 each month on debt number two. Okay, you see how that works? So the snowball grows as you pay off a debt. So now we take our snowball started at 30. We now take the 30 that we were paying on this debt that's now paid off, added to the snowball. Snowball is now 60. You can see that over here in this column. And then for remaining months, we're adding it to debt number two, 110. And we repeat the process. Just keep going. Repeat the process until we get down here to August of 2033, where debt number two is now paid off. So we take this 110, because our new snowball, we add that to the 25 bucks that we were paying on debt number three originally. And we can see here 135, and we keep doing the same thing over and over and over again. We keep repeating that process until every debt is paid off. And based on the current standard, it would take us till December of 2038 to be debt free. Craziness. We're not having it. Okay. We're not having it. All right. So, and you can also see that date reflected here. So you can see it's congruent. Everything's aligned. Now, here's where the magic happens. Here's where the coolness happens. If you had a way to add an additional amount above and beyond your snowball that you currently have, you would get out of debt much, much faster. Okay. And that's where this debt freedom syndicate process comes in. What we advocate is adding an additional income via a side gig. Okay. We're going to add a side gig that's going to bring in some more money that we can throw at this debt to burn off this debt faster and get us out of debt in record time. Okay. So the more we can add to the snowball, the faster we get out of debt, the less time we're going to be paying on this debt. All right. It's that simple. And with this calculator, under the additional column, this is the column where we're going to add in the amount that we're going to, include on top of the snowball each month to get us out of debt faster. So let's just say we start a side gig, and we recommend a simple side gig. We'll talk about that in the next video, but we recommend a simple side gig that's easy to do. Anybody can do it. It can help you bring in some extra money each and every month on a recurring basis. That's the key. That's what you want. Recurring income coming in that you can add each month, and it grows each month, and you get out of debt much, much faster. So let's just say we're in July right now. We start our side gig this month. Okay. In August, let's just say for fun, the side gig brings in an extra $100. Okay. For August. Now, what you're going to notice is every time we put a number in the additional column, it changes a few things. It changes the amount of the snowball. It changes the amount of the payment that we're going to send to the creditors, and it changes the date when we're going to pay them off. Okay. So every time we add a number, these dates are going to adjust a little bit. So you'll notice that every time. So let's say we have $100 recurring for the first 2 months. Notice when I put it in, these dates change, this amount changed, the snowball amount changes, and we keep going. All right. So now let's just say in month 3, we got busy and we got it up to $500 a month. Notice what happens. Now we're paying $530 for our snowball. So we're adding $530 to the debt. We're paying off much, much faster. And you will notice the dates, the month paid off, and the number of months to pay off reduces every time we add a number. Okay. So now let's just say month 4, we had the same. Month 5, we had the same. Month 6, we bumped it up to 1,000. As I'm changing these numbers, you notice these dates are getting sooner and sooner, and the months to pay off are getting smaller and smaller. That's what you want. That's the key right there, the golden nugget. So what we want to do is work the side gig to bring in more money each month, each and every month. That's going to help us pay off this debt faster and faster. So let's just say we stayed at 1,000 for a couple of months. Let's say 3 months. I like the 3-month number just to make it easier. As you can see, as we do that, the dates, we're getting faster and faster. So if you notice, we started out in 38, August 38. We're now down to February 34. Okay, so we already knocked off 4 years off our debt payment. 4.5 years, actually. Okay, so we're gonna keep going. Now let's just say we start feeling this thing. We can see the light at the end of the tunnel. We see the debt amount reducing and our payoff date getting closer and closer. We want to get busy, so we accelerate and we start doing $2,000 months, and then we get to $2,500 months. So you basically just keep playing with the sheet, okay? Not 25,000, 2,500. You keep playing with the sheet and you keep adding the amount, okay? That's all you got to do. Now, as you can see, again, the payoffs are getting sooner and sooner the more money we can add, as you can see right here. All right. So the more money we can add from our side gig, the sooner we can get out of debt. Now, let's just say we stayed at 2,500 till the end. Okay. Look at this. Look at this. Boom. We went from August of 38 to December of 24 just by adding $2,500 a month to our side gig, to our debt snowball. Do you see the power of adding what we call this accelerator, okay, which is additional income from a side gig added to the snowball will get you out of debt faster and faster and faster. That's the beauty of this process. You apply that, just follow the simple plan, use the snowball method, add the additional each month directly to your debt. You'll be out of debt in no time. And then guess what? Now you have money freed up, because from this side gig, the money don't just stop when your debt's paid off. This 2,500 is still going to keep coming over and over and over again. But now you don't have any debt to pay off. So guess what? Now you got money to invest. Now you got money to donate to charities or to your church. Now you have money for your kids' college. Now you have money to take vacations. Whatever you want to do, you can add to your house, get a better car, whatever you want to do. You have the options now. That's the power. It gives you options, and that's all we really want. Okay, so that's it. That's all we're gonna do with the debt snowball. That's all you need. Now you have a game plan. You know what to do, and this amount is determined by you. There's no set amount that you have to get. You determine what that amount is and how hard you want to work your side gig to bring in the money to make that additional column go up. Okay, there it is. Very simple. So now, again, on this page that you first went to, you have all the steps. We're going to use this side gig here. It's only $20 to get started, $20, but the power that it gives you in the long run in terms of paying off your debt faster is phenomenal. It can't be touched. It's unmatched. $20, anybody can afford it. And that's why we chose this program, because anybody can afford it, but it has a huge payout on the back end. And you'll see, we'll get into that on the next video. Right now, we just focus on the calculator, but go through these steps, sign up, go ahead and sign up for the $20 program. It's $20. All right. I'm telling you, you'll need an account here at Leadsley, because that's what this is built in. And then finally join our Facebook community. If you have any questions, if you have any concerns, if you're confused about something, post it in the group. We'll help you. We're here to help. The whole goal is for all of us to get out of debt as soon as possible. And then we can start taking trips together and doing stuff with our families. All right. Okay. So with that, I'm punching out. Thank you for tuning in. Take care. Catch you in the next video.